Business confidence is making a slow but steady recovery. The Chamber of Commerce and Industry says its business confidence index averaged 110.9 points for the first 9 months of the year. This compares to an average of 109.2 points in the prior corresponding period. Positive contributors include an improvement in tourist numbers, better factory output and lower inflation. Eskom has proposed a sweeping overhaul of its electricity pricing design, and the energy regulator says it plans to make a final decision on the matter in January. The proposal calls for the scrapping of the so-called inclining block tariff. This approach charges households less for the first 600 kilowatt hours of electricity and progressively more for additional usage. This was designed to cushion poorer households, but with more affluent households installing solar panels and using less electricity, they benefited from the lower rates too. And this has resulted in a loss of revenue for Eskom. To address the situation, the state utility has proposed time-of-use tariffs for residential customers. This system allows for electricity to cost more during peak times and less during off-peak times. Should NERSA make its decision on this in January, the new approach could be implemented from April. South Africa's wealthy are pushing back against a deal to sell 20% of SA Rugby Union's commercial rights to a US private equity firm, Karu Sports Group. A letter from SARU's member unions shows that Aspen CEO Stephen Saad, who also chairs the Sharks, is amongst those against the deal. Blue Bulls owners Johan Rupert and Patrice Motsepe have also noted their displeasure. The deal's questionable structure was made public by Business Day yesterday. The final detail shows that Karu Sports Group's $75 million investment in SARU Commercial Rights Company is more like a loan than an outright investment. That's because ASG will have its capital outlay repaid over time, with it retaining its 20% stake. Member unions are supposed to vote on the deal on Thursday, but have asked for this to be postponed. Bytes Technology has posted a profit bump. The firm has reported a 19.5% rise in half-year headline earnings per share. That's thanks to growth in its two main income streams, software and internal services. An interim dividend of 3.1 pence per share has been declared. This is up from 2.7 pence the previous period. Looking ahead, the company says it is well positioned to benefit from the structural demand drivers it sees in its markets, including cloud computing, cybersecurity and AI for the remainder of the 2025 financial year. Strong, that's how Karu has described its second quarter. The owner of Cartrack has posted a 31% jump in adjusted earnings per share to a record R7.35. That's thanks to strong subscription revenue growth and higher gross margins. Given the performance, Karu expects annual adjusted earnings per share to be between R27.50 and R31. In company news further afield, Sweden's Ericsson says that the telecom equipment market is showing signs of improvement after reporting core earnings and sales above expectations, boosted by a rebound in demand for 5G gear in North America. Let's take a look.
Ericsson reported earnings and sales above expectations. The Swedish telecoms gear maker said the market is showing signs of improvement. It cited a rebound in demand for 5G equipment in North America as one key driver. A fall in demand from mobile operators there over the last 2 years had hit companies like Ericsson and rival Nokia. The firms had looked for growth in developing markets such as India instead, but that often hurt profits. Ericsson's net sales fell by 4% to just over $5.9 billion, but beat estimates. Sales in North America increased more than a half. They were helped by last year's $14 billion deal to supply gear to AT&T. Revenue in Europe and Latin America was down 2%, while other markets fell in double-digit terms.
Now China may raise an additional $850 billion from special treasury bonds over 3 years to help stimulate its sagging economy. Here's more detail in this package report.
Earlier, media group Caixin Global had reported that Beijing is set to raise $850 billion in new debt to help boost the economy. That comes after Finance Minister Lan Fuan said over the weekend that China would increase debt issuance, but didn't put a number on it.
目前我们增发国债正在加快使用。
Beijing has been increasingly concerned that it won't meet a target of 5% growth this year. Alarm has been raised by a slew of data coming in below expectations. Just this week, that was true for new numbers on trade and lending. In late September, authorities unleashed a package of monetary stimulus and property sector support measures. That helped drive shares to two-year highs. But the gains soon faded away as traders lamented a lack of detail on the new moves. Kaishin says some of the additional money will be used to help local governments pay down their off-the-books debts. Many municipalities have been hard hit by the sharp downturn in the country's property sector, as they rely for much of their income on auctioning land to developers. The property crisis has also weighed on consumer spending, with much household wealth tied up in real estate. Now, the Finance Ministry says the new stimulus will also provide subsidies for low-income households, support the housing market, and bolster capital at state banks.